So talking a bit about the market perspective, because we are halfway into 2025 or over it, and how would you in general look at the markets? It seems like some people are favoring some segments, but the broader picture is maybe that it's been very, very strong years for different segments. So maybe it's not rainy days ahead, but still it's hard to replicate those peaks, at least in some segments.
Yeah.
Or is it hard to forecast? And
Well, of course it's hard to forecast, but that doesn't mean you shouldn't have an opinion. So I think on tankers and dry bulk, so crude oil tankers and dry bulk, we are still optimistic. Probably even a little bit more optimistic on dry bulk than on tankers. I think the tanker story, we've been waiting for this huge market for the last 2-3 years. Maybe it's going to come now in the fourth quarter.
Is that just sanctioned away because they get all the dark fleet get it? Or is that too easy explanation?
I think, Christopher, again, you should ask some of the analysts who do that as a day job. But it is very difficult to assess the impact of sanctions, whether it's on Iran or on Russia, because every time you would untie them, you would have some positives, but also some negatives for the market. So I think it's very difficult to say. What worries me a little bit on the crude tanker space is that we've been talking about the bull market for so long, and next year is actually, or this year is the last year where we have hardly any deliveries of new ships, but as from next year, you're going to start seeing new capacity coming on stream. And we still haven't seen this $100,000 market for 6 months. So, but still, fundamentally, the fleet is old. We have this dark fleet, which will have to disappear eventually. The order book is still manageable, even though it's gone up. And on paper, demand should start picking up. But so let's see what the future brings. On dry bulk, it's the same dynamics. An old fleet. We have a very low order book. We think cargo growth will be there. It's not going to be massive, but there will be growth. So we are positive. Containers, we are not so positive. And that's why we've covered basically the container exposure that we have on very long-term charters, purely and simply because of the order book. And if the Suez situation turns around, then I think it will be tough times for containers. But we've had a fantastic run on containers. So it's logical that after a while, you come back to a normal market or a worse market. On offshore wind, we're very positive. Regardless of some projects that have been cancelled, all the noise you hear from America, but that was never going to be our market because that's very specialized. We still think that the offshore wind markets are very promising, and with it, you see all the side projects on offshore oil and gas as well. So we think that is an interesting market going forward. And on the chemical tankers, we are neutral. We think we probably had the best market is behind us, but we are still seeing very okay markets. The order book has grown a bit. We're probably past the peak, but there again, we've taken a lot of cover on chartering on chemicals. So that's a little bit how we see the market today. Now, our strategy has also been aligned. We've covered the segments where we're a little bit more cautious, and we're very much open and exposed on the segments where we think we will have good markets.
So you talked about, this maritime company now having several legs. So the wind vessels and the tugboats and the port boats, how substantial of a leg is that in this system? Is that more like a niche thing or a substantial?
In terms of asset value, I think you're not talking even 8%, 9% once all our CSOVs are delivered, because it's mainly the CSOVs. Our CTVs, it's a value of 4-5 million per CTV. We have 60. It's just nice. It's just a nice portfolio. But of course, compared to 2 big VLCCs, it's very little. But we still like it, even though it's smaller, because it has plenty of opportunities going forward. We could really grow in that segment. And also because, don't forget, we are a diversified company, but we are also faced with very diversified customers. We have more and more customers that are not only invested in dry bulk commodities, but also have an energy arm or also have a renewable electricity arm. And so it's very interesting to have different ships in our menu to offer to certain customers. Again, to use a little anecdote, when we used to go to an oil major, we would basically, in a 20-story building, stop on floor number 4 for the VLCC chartering department. Now we can stop, at every department, the chemical tankers, the Suezmaxes, the offshore wind, even on the dry bulk side. So it's much more diverse. So we spend more time at our customers and engage with them to understand what they want.
If you could add an additional leg with a new segment, if you had to, what would you do? Is that business secrets and this is never going to happen?
No. We have looked at car carriers, but we don't think it's the right time to get into that market, and it's also a very specific market. We will eventually look at the transportation of ammonia. We might look at product tankers as well. As long as it's generic, commoditized shipping, and not building huge drill rigs or wind turbine installation vessels, etc. These big white elephants. Otherwise, everything which is shipping and has a large enough market, we will look at.
Is there any interesting opportunities you can tie into the defense spending, or is that going to be completely separate and not?
For sure. That is something we will engage with, but it will have to be a project which will always be a combination of some defense work, but also just normal commercial work. We will never become a dedicated defense service supplier.